Hi, fam. Welcome to Electronic FX. And today we'll be talking about demand and supply zones. I know most of you must have heard demand zones, supply zones. You must have heard it even in economics, right? In our local markets, you hear them talking about demand, supply, and all of that, right? Those basic things apply to the financial market as well, right? There have been so many concepts about demand and supply, and I just want to break it down in the most simple form so that you will see this thing. The most important thing is not to know it, is to be able to apply it and make profit, right? It's not just to know all those definitions and all of that. So I will just define it and then I will use illustrations to describe how to treat it, right? So in simple terms, a demand zone, right? A demand zone is simply a zone where much buy pressure exists, right? It's in a zone where there is much buy pressure, while a supply zone is a zone where much sell pressure exists, right? So this is how to simply define it. It's a zone where you see where much buy pressure exists and a zone where much sell pressure exists. That is your supply zone. So now, what is the concept of demand and supply zones? You know that the market is controlled by liquidity. The market is moved by orders. So a demand zone is a place where the buy orders are much, right? So let us bring our charts. Maybe you see the market trending downwards, doing something like this, and then suddenly it gets here, and then you see a very strong push up, right? So this tells you something, that at this point here, right? This point where you saw this heavy push to the upside is some kind of demand zone. Why? Because the buy pressure is a lot there. Or you can call it, let us make it, or why much buy pressure or buy orders. Let's add that buy orders. That means there are a lot of buy orders at that place. There are a lot of buy orders at that point. So that is where people are put. That means there are a lot of buy orders right there. And the immediate price got to this place, it was activated, and then you see this sharp rally up. So this zone becomes a zone of interest because sometime in the future, if price should eventually come back to this place, we are going to still see something like that again, right? It's worrying to note that these supply and demand zones are very, very relevant in your trading because they help you to catch the large moves and all of that. So now, as I was saying, this zone now becomes a demand zone, right? Because what you saw a lot of buy pressure at that point. So let's demand zone. Let's just make this bigger. So that this place becomes a demand zone. This point here, where you see this sharp pressure, you see this sharp buy pressure that just rally upwards. So and that same thing applies to sell. You maybe see the market selling, the market trending upwards, and then price get to a particular level, and the market was forming higher highs, higher lows, higher highs, higher lows, higher highs, and then the market suddenly gets here. You see something like this. You just see something like this. So you're wondering what happened. At this point, there was a lot of sell orders at this point. So you can call this place your supply zone, right? You can call it your supply zone because a lot of sell pressure or a lot of sell orders exist at this point here, right? So in the future, when price comes to this point, you expect to see this kind of long sell or heavy sell momentum, all right? So you can use this to streamline your trades, right? There are no people that only trade demand and supply zone. That means they don't trade all this structure and all this. They only wait for price to get to their demand or their supply zone, and then they take their trades from there to the next zone they can find. So this place becomes what? A supply zone. Why? Because a lot of sell pressure, a lot of sell orders exist at that point. So if price should eventually get to this place in the future, we expect price to do the same thing. Just start there and go down, right? And last thing is, we want to note something that is important that you to trade distance in line with the trend, right? It's not right to just trade demand zone and supply like that. You have to trade it in line with the trend. If it's a bullish market, you should be looking to catch your higher lows at the demand zone. If it's in a bearish market, you should be looking to catch your lower high at the supply zone. Like this, you see this. The market was trending. Sorry, it's good to catch your sell orders in the supply zone. So let us remove this and illustrate with that. So now let's bring our zone down a bit, right? So we understand this thing. So it is worth to know that you should trade this thing in line with the trend. That means if the market is maybe it was trending downwards, and then it comes here, this is a good place to sell from this supply zone, and then it takes to the next lower high, goes down. This is the right way to trade it, right? So you can always use these things to make your trading easier. Always take your trades in line with the trend and at these kinds of zones, right? It's not right to just trade it. Maybe you see the market trending upwards, you just want to catch it. No, you most likely will just reject and still come back up. So you trade this in line with the trend, not against the trend, right? It's good to trade it in line with the trend, not against the trend. So the market is making lower highs. You're looking to catch that supply zone, right? Let's go on this. So and the market comes down again to this point under supply zone, you take your next sell at that point. So this is how it should be traded the right way. Trade it in line with the trend, not against the trend. Maybe see another supply zone at this point here. You catch it. And how this spots is supply zones, you check your previous chart. Always check the left, right? That's how you catch your supply zones and all of that, right? Now, how do you identify supply zones and demand zones, right? How do you identify supply zones and demand zones? So let me delete all of this. Right. So let us go to the next thing. How to identify demand and supply zones. How to identify demand and supply zones. The first way to identify these things, right? You look at the candlestick pattern for the heavy move, right? So you look at the candlestick pattern before the heavy move. That's how you identify this thing, right? You look at the candlestick pattern, right? And what you're looking for, you're looking to see indecision candles, right? You're looking to see indecision candles. You're looking to see indecision candles, right? Now, maybe the market got to, let's reduce it. This is so big, right? Let's reduce it to 20 or 14. So how to identify demand and supply zones? You look at the candlestick pattern before the heavy move, right? Look at the candlestick pattern before the heavy move. Now, what do you want to see? You want to see some kind of indecision at that point, right? So let us look at 3 charts. I don't want to draw anymore again. So now, this is a real chart, right? Now look at this. You look at this, look at this, and then you see this, you look at 2 indecision candles. Look at 1, 2 dojis, right? And then you saw this heavy move. So this point here is a demand zone, yeah? And if you extend to the future, look at what happened. Immediate price came into this demand zone. Look at this sharp rally up, right? So you look at the candlestick pattern and you always notice by indecision candles. You always find indecision candles, something like this. You see 1, 2. It means that at this point, the sellers could not take price further down. They tried, and then the buyers took over the market and pushed it up. And look at what happened. It came to this point again, and then look at how market has rallied upwards, right? I know this market was bullish. This is a high. This was a higher high. This was a higher low, and then this was a new higher high. So you trade this thing in line with the trend. Look at the indecision candles here. This is how you trade this thing, right? This was an indecision candle that told you that sellers could not take price. This is a daily time frame. So sellers were in charge for 1, 2, 3, and for about the 4th day, they could not move price lower. All right, you see this heavy move up. So this place becomes what? A demand zone, right? It's a demand zone. So you can label that. Can label the demand zone. So you look at the candlestick pattern. So here it becomes a demand zone. Here, at this point here, it becomes a demand zone. Why? Because the buyers, their orders were a lot at that place, right? So here it becomes a demand zone, this point here. And then if you extend to the future, you can see how price came to that same area, right? Look at that same area. Look at it. price still came to that same area and bought for some days before finally breaking it. So this place becomes a demand zone. Always remember, always trade this in line with the trend, not against the trend. Right? Like this market was bullish right from this point. It was making series of higher highs and higher lows. High. So you can see the market was bullish right from this point. It came here from a higher high, higher low, and then it rallied up. So this market was very, very bullish. So always trade it in line with the trend. And the reason it broke here is because this market became bearish. Look at, there was a break of structure here. The market broke structure somewhere around there, and then after the break of structure around there, you can see the market has been bearish since then. So it wasn't advisable to come and take a buy trade there. All right. So that's why it broke down, and then you can see it's going down. Now, another way to know, another thing to know is that we have what we call the strong demand and strong supply zones, right? How to know the strong demand zones? The strong demand zones are seen with fewer, right? Fewer indecision candles, right? So the supply zones, the demand zones are seen with fewer indecision candles. That means if you come and you're seeing about 10 candles like this, it's telling that place is not really a strong zone. It means that the buyers were still trying to push. I mean, like here, if maybe you saw about 5 or 6 candles here, it's to have told you that this point is not a strong demand zone. Why? Because those indecision candles means that buyers were not able to push price for this amount of time, right? So you notice this place with fewer candles. Maybe you see just one candle and then you see the heavy push upwards. This one, for this one, we only saw only 2 candles, just 2 candles, and then this. So this told us that this place was a very strong demand zone because of the indecision did not take a lot of time to change power. That means the buyer did not take long to take over this market. So here it becomes a demand zone, right? Now, look at an example of another thing. Now look at this. The market came to this point here, and you can see that the market took how many days to sell down? It took, oh, look at all the time it took to sell down. Look at all this time it took to sell down. Look at it. It took all this time to sell down. It came here the first time, came again, came again, came again. This was the supply zone, right? But look at how long it took to sell down. And look at what happened. Price just came, touched, and broke it immediately. And look at how price has been breaking that zone. Let's draw this. Look at this. So this is a kind of supply zone. Look at how price has been breaking and breaking it. Look at how price just came, touched it. Look at it took about almost 3 days again for it to send price. And look at 1, 2, 3, 4. So this place is a weak supply zone because of the indecision candles it takes before price turns around. So this place becomes a very weak supply zone, right? You look at the candlestick pattern to tell you if it is a weak or a strong supply zone. So this is a weak supply zone. Why? Because it takes a lot of time before the sellers can take charge of this market. So we saw that, look at this. It took how many days? Look at the number of days it took for price to go down. And look at how price came in. It took almost 4 days again for price to go down. And finally it broke through. Look at how this one said it didn't even waste time. It just came, breakthrough, came down again, went up. Then look at how it has just been taking a lot of time. This is a weak supply zone. Yes, a strong demand zone because of the little time it takes to move. Just look about 1, 2, 3, and look at the move up. So this is a stronger demand zone. This is a weaker supply zone, right? So you can use the candlestick pattern to know if it is a strong or if it's a weak supply zone, right? So these things occur frequently on your chart. You always find them on your chart. You always find them on your chart, right? You can find them even in between the middle of the market. So let's look at our 2-hour time frame to see if we can also see this on a smaller time frame. This is a daily time frame, right? So let us check a smaller time frame to see if we can see all these stuffs here, right? Now let's look at this is the 2-hour time frame. Let's look at another asset. I don't think I will see. You'll see this. You may really see this here. Let's look at this market. Let's look at this market and see if we will see something like that on the VIX 100. Right. Let's see if we will see anything of that nature. A major demand or a major supply zone. Okay. Okay. I'm still checking to see if I'll find one. Okay. Oh, we are still checking to see if we'll find a demand or supply zone in this chart. Right. Looking for those kind of places. Right. Let me use the 4 hour time frame. Maybe 4 hour may show something like that because you see, it's not easy to spot all these things with a smaller time frame. It's usually very easy to spot it with the daily time frame or something like that. Look at this point, right? Look at it. Here's a supply zone. Look at this cell. Look at all these indecision candles. But this is a 4 hour time frame. But this is a kind of weak. It's not really that strong, right? It took almost how many candles to push price up. So this is a supply zone. Sorry, demand zone. So if you highlight this place, look at how the market is actually a weak supply zone. It's a weak one because look at how long it took for price to move up, right? Look at this. It took so long for price finally even gave a false break, and then this is a weak supply zone. So it's a weak demand zone, right? Because of how long it takes this market to move from there, right? So we can simply label this as a weak demand zone, right? It's a weak demand zone because of how long it took. Look at how many candles it took before it rallied price up, right? So this is a weak demand zone. And look at how it gave a false break before going downwards. So you can always spot this thing on any time frame. Always notice by the indecision candles and all of that, right? I'm trying to look for another one to see if I'll see another one. Okay. Let me just keep going backwards, not forward. Just keep going backwards if we see anything like that again. Anywhere we can see this kind of stuff. Okay. Okay. Right. Yeah, we can also call this a demand, a supply zone too. Because look at 1, 2, those are about 3 candles, and then look at the rapid sell down. So if you highlight this to the future, right? Look at those very few rejections. So this was a stronger zone. This is a stronger one. This is a stronger supply zone. Why? Because look at how long it took to sell down, just about 2 or 3 candles, right? So you can call this a stronger supply zone. I always trade this in line with the trend, not against the trend. Right, you can call this a stronger supply zone than a stronger one. Right, so look at this. Price came there again. Look at those. Look at just 1, 2 candles, and then this rapid sell down, and finally it broke because this structure was actually bullish. Actually broke structure somewhere around there. This is the last higher high, so lower high, lower low, lower high, lower low. Then it broke structure when it closed above this candle here. So there was a break of structure to the upside, and then it finally broke upwards. So don't always trade this in a line with the trend, not against the trend. As for this market was bearish, lower high, lower. It came on almost like a double top here. It was still a bearish market. That is why it just have these few candles and then they rally down. So always use trade this in a line with the trend, right? Always spot them on daily or 4 hour and all of that. So this things will actually help your trading. It will help your trading, right? So you always find all these things on your chart. This is a daily time frame. Right, this is our daily time frame. You can find this almost on all charts, right? You can find almost on all charts, right? You always find the very few indecision candles and then a rapid move to the upside or to the downside, right? Now look at this, look at this, look at this, look at this. Look at how markets came here. Just very few touch and then it sold for 2 days. Look how price came there again and then it rallied all the way down. Although it took time here, but this is a supply zone and it's a stronger one because of how little it took time price to rally from that point, right? So just spot all these things on your time frames and always take a trade from there at that point or there. Look at this. This was a very, very strong supply zone. Look at just one decision candle and then rally up, right? Just one candle and then it rallied up. This was a very strong demand zone. Yeah. So look at what happened. Just one candle just one candle, and then it pushed up for 3 about 4 days, and price came there again. And look at, so this is a very strong demand zone. So you always find this in your chart. I hope this helps you and improves your trading. All right, always draw these things in line on your charts, so observe them and trade in line with them. All right, now in addition, our mentorship is still ongoing, and I say that it's going for just $40 to the end of. So our mentorship is still going on. It's going on for $40 to the end of August, when it goes back, after which it will go back to the normal price, right? It's still ongoing from now to the end of August, after which when it will go back to the when it goes back to the actual price. Yes. So if you want to register for our mentorship program, just do what to hit the link in the description page, and then it will help you to trade. Right. So that is it for now. Cheers and God bless.